Hi everyone, Michael from Bullion Now, bullionnow.com.au, coming to you from the Bullion Now bunker. And as you can see, we're using a slightly different camera, so hopefully it gives you a better sound quality, but also a slightly wider view. So you're not only getting the Bullion Now sign, but you're also getting one of my other interests, which is my aviation, particularly the historical aviation side. So there you go. Apologies in advance if it has no interest for you at all. So the reason we're doing this video is we saw today that the Reserve Bank of Australia held interest rates at the current level. And I guess I wanted a bit of a discussion as to what that means for us as bullion investors. If it means we should panic and dump everything, or if we should panic and buy everything. And I'm not one to panic either way. I think that there is way too much hype in the headlines and on YouTube and all that sort of stuff. And we need to just take a deep breath and have a look at what history has taught us when these sort of things happen, and to try and take it into context. So without actually just pulling the Reserve Bank interest announcement out and looking at it in isolation, I think you need to look at what's happened over the last 24 hours and over the last week or so. So we've seen, or even probably the last month, so we've seen a lot of things happen. The Reserve Bank, as I said, held interest rates where they are. Now that normally, in a normal environment, it would actually drive the Australian dollar down initially, which would cause an increase in the gold price in Australian dollar terms, in local currency terms. But I think this was it was kind of half baked in already. So I think we're going to see a little bit of currency oscillation between up a little bit, down a little bit, but I don't think we're going to see much. So I don't think that's going to have a great impact in and of itself on the price of gold or silver. However, I think the indications that the Reserve Bank is throwing out there, when you tie it in with, over the weekend we saw OPEC plus decrease the amount of oil they're producing very, very soon, which caused a spike in the oil price. We also seen, and we've done this to death, so I'm not going to dwell on it too much more, but we've seen the banking collapse both in the States and Credit Suisse in Switzerland, and the fallout from that. We've had a lot of interesting rhetoric from a lot of people who are in the know, or the brains trust, however you want to look at it, about what this all means. And I think if we take the broad picture, they're pausing interest rates. Usually they pause interest rates because they're kind of thinking that inflation's coming under control, or, and this is where I think we're at more likely, they're a little bit worried about the economy, and they don't want to increase interest rates too quickly and cause a crashing of the economy. So, and that's more a local level than on an international level. But I think there's very much this uncertainty, and that drags back to the banking crisis that we've seen. People are worried about that, or the powers that be are worried about that, and by overinflating the interest rate by causing that crashing of the economy. We're also seeing that, like I said, OPEC decreasing their production, and that is also, initially it's a sign of, the Americans are kind of chest thumping a bit, saying, oh, well, you're just trying to drive the price up. But if you actually read between the lines of what particularly the Saudi ministers are saying, but a lot of the countries that are involved are saying, they're actually saying we're worried about a decreasing usage, decreasing demand of oil going forward, because we're seeing weakness in the major economies around the world. And the politicians are turning a blind eye to that, or trying to turn a blind eye to it, because no one wants to come out publicly and say that their economy is struggling. But I think that OPEC is actually recognising that. More on a domestic level, we're seeing the collapse of building company after building company after building company in Australia. Interestingly enough, Metricon was propped up with potentially government money, but they're pretty much letting everyone else fall over. And that also is a reflection of what's going on in our economy. It's a reflection of what interest rates are doing. So I think we need to take all of this whole bubble that we've and there's a lot of information, and I'm massively generalizing in all that information that I've drawn together. But what we're seeing is an economy, or what we're seeing is signs of either an economy about to take a fairly sharp turn downwards, or if the Americans are right and the OPEC countries are purely just trying to increase or inflate the price of oil, then we're seeing a redirection back towards high inflation. Either way, in my personal opinion, and again, this is, and I can never give financial advice. I am not your financial advisor. I'm not your accountant. But reading between the lines to a simple mug like me, it seems that either we're in for turbulence with an economy collapsing. No, not even collapsing. We don't even have to say that. And I don't like using those words because they're very emotive. But with an economy that's easing, cooling, slowing down, or we're going to be dealing with the inflation drag, and again, going up and up and up. One way or another, it seems to indicate to me that I should be, read into this whatever you like, I should be turning more towards conservative, excuse me a moment, I didn't put that on silent, conservative assets, conservative physical assets that are going to hold their value in these types of environments. Whether we go through, hell in a handbasket and the economy collapses, or even only eases gently, or we go the other way where inflation inflates, or heaven forbid hyperinflates. I still think that at this stage, playing into the physical markets, the physical assets, yes, okay, I am talking specifically about precious metals, so your golds particularly, but gold, silver, platinum, and to a degree palladium and rhodium, although the last three that I mentioned are very heavily industrial stocks, so they bring in a whole new spin. But for me, I'm looking towards these physical assets. So I want to control them. I want to know how they perform in regards to inflated markets, or I'm desperately trying not to use the word collapsing markets, but or collapsing economies, but easing economies. I want assets that work well in those environments. I'm looking for the quote-unquote bargains if I'm moving into something like a share, like a business, or a property, and I use those terms very carefully. But if I'm moving into something that over history has shown a really good, stable value holding pattern, then I'm looking at something particularly like gold. And while I need to be careful here. I'm not saying go out and buy gold at any price or anything that's gold, but I am saying intelligent purchasing of gold assets. I think for me, I will be pleased I did that over the coming, year, 2 years, 3 years, 5 years. And even if I'm wrong, and this is what I particularly like about gold, even if I'm completely wrong and tomorrow it's all sunshine and rainbows and the economy's wonderful, inflation's under control and all those, wonderful soothing things, because I'm holding a physical asset like gold, I know that it still will have a good value moving forward, even in that perfect scenario. So you kind of, you win if it all goes pear-shaped, and you kind of win, but probably not quite so much if it's all sunshine and roses the next day. So to me, for me, and again, I'm not telling you to do this, I'm just giving my opinion on it as just a graying-haired guy behind the camera or in front of the camera. For me, I think that it's an okay win in the worst case scenarios, and it's a really good win in the best case scenarios, and I'm happy to take those kind of risks. That's all I wanted to say. It's quite relevant, and I know a lot of people are talking about it at the moment. I just wanted to take that heat out of the panic, and you'll see a lot of fear-mongering over the next coming days. Just relax, take a deep breath, look at it in context, look at your own situation in that context, and then make some decisions moving forward from there. Remember, we're always here to answer your questions, your comments, so you make your comments down below and we'll certainly reply to them as well as we can. We have a live stream on Fridays, so although we're missing this coming Friday because of Good Friday, but after that it's 2:30 Australian, let's say Melbourne time, with all the clocks changing at the moment. And you can also send us an email to sales@bullionnow.com.au or give us a call 1300 84 84 10. We're more than happy to have these discussions with you, again, in a general sense. Or you can stop by the store, level 6, 227 Collins Street in sunny old Melbourne. All right, that's it for now. We'll talk again very, very soon. See ya.